you rather soon.
Thank you.
Well, for the markets, as we speak, we are trading at more or less the flat line, mildly move into the green. That's because a couple of big names have moved up. Reliance Industries has moved to the high point of the day, so I think you'd like to get that stock back up. You know, it moved into the green, now it's recovered a little bit, and that's a big weight in there. Adani Enterprises as well, smashing it out of the park. In the last few minutes, you have Adani Enterprises that's just taken off. That's moved to the high point of the day, and Adani Ports as well is seeing a bit of a pep up as we speak. Shiv Puri, founder and managing director at TVF Capital Advisors, joins us on the show. Hi Shiv, good afternoon. Thanks so much for joining in. Well, I wanted your first thoughts on the budget. At the start of today, people were saying, let's see if there is something for the rural economy to pep it up. And also the eye was on capex spends. What is your first thoughts on what we've heard?
I think the first thoughts are really fiscal discipline, which we have seen across heard from other people across the board. I mean, it's interesting. We're moving from a glide path of, say, 5.7, 5.8% to 5.1, and the U.S. fiscal deficit's at 6.4. You know, the roles have reversed, and I think this is a budget that really shows fiscal discipline at the moment. That's you know, India is going to be hopefully in the JP Morgan bond index by July. That's the expectation. So if you've got fiscal discipline, you've got the ability to attract foreign capital into the bond market, that is going to bode well for domestic, for liquidity and for the currency. So I think the macro is in really good shape. The other highlight, of course, is on capex. You know, while the number's up, I think about 11%, it's actually up a lot over a two-year basis. Maybe 45 or 50%. Is the number for the last 2 years. So there's a major focus out there, and of course that has ripple down effects onto many industries in India. Rural spend is up, but you know, I think that is much needed, and we all know the rural economy is a little soft. So perhaps something a little bit more happening on that front would be nice to see, I guess, when the full budget is presented in July.
No, absolutely. Shiv, hi, good afternoon. And every time I see you, you look younger. I don't know what the secret is. Congratulations.
Thank you.
Shiv, I don't think we have spoken after that entire HDFC Bank sort of saga played out post-earnings. Financials is your number one bet, has been for years. How do you read this entire thing on HDFC Bank? And do you think this is a great opportunity for those who want to buy?
Well, first, let's start with the industry. It's quite clear that you know, we have a liquidity crunch in the market. I think the shortfall is something to the order of 45 to 50,000 crores. So therefore, deposits the rates have gone up, and at the same time, you know, you're going to see so the NIM pressure is therefore clearly there. At the same time, you saw over-provisioning during COVID, and so NPAs were artificially low, and that is going to course correct and come to a more normal cycle. So I think temporarily, you're seeing across banks slight NIM pressure, as well as slight increase in NPAs. Banks are in pristine condition. It's just the base was really low. So that's applicable to all banks. I think specifically with HDFC, the issue has been around the merger. And, you know, pre-merger, there was the expectation that the earnings would be accretive, that the NIMs would remain steady. But it seems that along the way, once they've actually presented the combined company, there's been pressure on both those fronts. I don't think that is something that is structural. I think it's an issue that will get fixed over the next few quarters.
So Shiv, you would be looking to buy into HDFC Bank at current reckoning, at current valuations?
Not making any recommendation on any specific stocks, but what I would say is with respect to HDFC, as you see, that there is pressure which is very cyclical in nature. There is no structural issue that is there, I think, with the bank long term.
Shiv, would you bet on more interest rate cuts by the Reserve Bank of India? Based on what we've seen, the lower gross borrowing by the government, the decline that we've seen in the 10-year bond yield. And if that's the case, you know, do interest rate sensitives, apart from financials, which you spoke about, do they make an attractive bet? I want to know what has changed for you in the last 24 hours with this budget.
Well, I think along with the budget, also you're seeing global interest rates that are softening. That's happening over the last couple of months. I mean, the Fed didn't cut rates yesterday, but if you look at the 1-year rate, the 3 and the 5-year, even the 10-year treasuries, they've all softened quite a bit. The 10-year has gone from 5 to 4%. So clearly the trajectory is for lower interest rates globally. Inflation is coming down globally. In India, we're seeing the same thing. Inflation is within the band. My sense is that the RBI is a little cautious on what's happened on certain segments of retail lending, as well as that inflation is still on people's mind, front and center. But as that recedes, I think interest rates are only going to head lower. And like you said, with the fiscal deficit at 5.1% of GDP, if we do manage to get to that number, that's an incredibly strong fiscal position to be in for monetary policy to ease.
So, Shiv, then sort of putting all these things together, really let's talk about the overall positioning for anybody who's interested in Indian equities, right? We are heading into an election year, and as we were just discussing earlier, we'll probably get a better sense of bigger policy announcements or anything more big bang, in the second half of the year. So therefore, given where we are, where valuations are, the banking issues that we've already discussed, what should the stance be, or what would your stance be on equities in the foreseeable future?
I think the backdrop for equities continues to be very constructive. And there are a few reasons for that. One, of course, is overall economic growth. You're seeing that to be pretty strong. India will this year undoubtedly be, again, the largest, the fastest growing large economy in the world. Therefore, you see it'll attract not only domestic capital, which you're seeing, but also foreign capital. Second, there is a push on very productive uses of capital within India, which is infrastructure and capex. Third, you are sensing from entrepreneurs increased optimism in doing capex and expanding capacity in the manufacturing sector. And fourth, you're seeing consumption increase, whether it's in domestic travel, healthcare, and other services. So when you put all of that together, along with the fact that you will see global interest rates declining and likely, therefore, a weaker dollar, that bodes very well for the Indian equity market. So I continue to remain constructive.
Shiv, just to wrap it up, you like financials. I remember you like hospitals as a space. Just what else as themes?
Financials, you have healthcare services, which is hospitals, consumer, which is not only just FMCG, but consumer services. I think these are the three big areas. Manufacturing selectively, I'm not sold on the China plus one just yet. There are some pockets of beneficiaries, but there are some really incredible manufacturing companies in India. I would say these will be the few themes that we look at this year.
Shiv, you mentioned consumer services. I have to ask you if you could elaborate. I mean, are you talking things like hospitality, tourism, or what exactly do you mean by consumer services?
Yeah, hospitality and tourism as one area. I mean, I think what you're seeing happen is also quite interesting, where, you saw this over the last decade, where a lot of people in China, when they got wealth of a certain level, started traveling the world and spending money across the world. And that's changed in the last couple of years. But as India hits that phase of GDP per capita, this might be a little different. We might choose to travel within the country and spend a lot of money within the country. And therefore, I think the benefit of that to the whole sector can be very structural in nature.
Shiv, we leave the conversation here for now. Thank you very much for joining in. We will slip into a very short break on that note. On the other side, we'll be joined by Nilesh Shah of Envision Capital and Dharmesh Mehta of Capital Advisors to talk more about the markets. Shireen will also be joining in with a whole host of guests.